Welcome back to the show. Today we have an exceptional guest who brings over 2 decades of real estate investing experience and 17 years of high-level corporate operations. My guest is Sanjeev Bhatia, president of LME Investments. He oversees the full investment process for a portfolio of value-added multifamily properties in one of the toughest markets in the country, Los Angeles County. From due diligence and financing to renovations and property management, he's been a hands-on at every step. Sanjeev, welcome to the show. Thanks for joining us.
Thanks, Marcus. It's my honor to be on your podcast. And thanks for the
Great. You're welcome. Now, Sanjeev, you spent 17 years as an operations manager at a major logistics company, leading hundreds of people and about $25 million in revenue. What was the moment when you said, I'm leaving this and going all in real estate?
Great question. I wish that was the case, that I decided one day. I've been doing real estate investment for over 2 decades, 2.5 decades, right after actually I was in college. And I was buying the properties on the side, let the income grow, got to the position where now my income from the real estate can support my lifestyle. That's the time I made the decision.
Okay. Yeah, it's never all in one day, but I know it's always a process. Now, how did your skills you built in operations and logistics, managing teams, systems, and process help you once you started buying and running properties?
Being my operational background helped me in the property management big time, because it's a hands-on 24/7, the same kind of a operation where you just, leaks can happen anytime. There's no advance notice for most of the repairs. And then you have to have your hands-on approach when you are small in order to grow. I think with that background, it definitely helped with me to just doing the property management, where most of the other operators, they shy away from this hard work. And I think hands-on operation, it is where the rubber meets the road. You know exactly what's happening at the ground level. What are the market rents at this time? What the tenants want? Where the market? What are the amenities your residents need at this time? Why your tenants are staying with you or why they are leaving? So those are the things. Being in a operational expertise helped me a big time, versus depend on someone else to give me that information. By the time you get the information, maybe you're too late to make any changes in your operation.
Okay. So tell me more about your company, how many people you have. You've grown it over the years. So tell me more about.
Yeah, so LME, we buy value-add multifamily apartments in Los Angeles County and the surrounding counties as well. So it's a vertical integrated company. We have a property management in-house. We do the acquisition, and also we have a fund as well where the private investors can come, and they are pure passive investors, and we are the one sponsor who just run the whole show for that. So we're keeping everything in-house because that's important. As I just said earlier, we are not the one who just like, okay, we do the one part of the job. It's a one-stop shop. And for the operation wise, we have a quite a big separate departments, like in property management, one, acquisition, disposition, investor relationship, that's maybe one department. And then for now, construction management, where we build the ADUs or other construction, that's a separate department.
Okay. All right. Good deal. So I know when you touched from land, single family, and more. So why did you decide to mainly focus on value add multifamily in the LA County as your main path for LME?
Great question. So why multifamily? Why multifamily is like, and let me answer that. I did invested in the past in the lands or other projects with the development. Those are, you can make a lot of money if your project doesn't work did your perform or the underwriting. You can lose money or your project can be delayed for years. Versus multifamily, it does not change. Like, for example, office spaces after the COVID changed big time. Industrial change based on whatever happening versus multifamily, even if the AI come or something else come, people need a place to live, and they need a roof over their head. And so they can just like a downsize or like they can just upgrade or downgrade for their needs, but at least they need some space, some unit to live. So multifamily is a low risk and, or I will say, risk adjusted return versus as compared to the other asset classes. And now, why Los Angeles? Because Los Angeles is a supply constrained market, or where we do not have a empty land, and where, like, for example, other states, if your rents are too high, developers come build another thousand units across the street. Now your tenants can move into those properties. Versus in Los Angeles is a very, first of all, we do not have any vacant lands unless you want 100 mile outside of Los Angeles. And to build anything is a tough. It's a lot of red tape, construction costs more, all the regulations are very challenging to build over here. And if somebody building, my tenants from my building, not going to jump into the brand new building. If they want to move into that one, they have to pay much more higher rent versus some other states where sometime tenants can move across the street into the brand new property and pay less than what they were paying across the street. That's not the case in Los Angeles. So in a nutshell, we are a supply constrained market, not easy to operate. It is one of the toughest market to operate, a lot of regulations. So name of the game is just, here is the operational expertise, long-term wealth building asset. That's why I just stick with the multifamily.
Okay. All right. And have you ever thought about going outside of Los Angeles County?
Yes. Yes. Like, Los Angeles County is surrounded by 3 or 4 other counties where, you know, is it right next to the Orange County, San Bernardino, Riverside, Ventura. All these counties are touching the Los Angeles. And wherever there is an opportunity but my main focus is Los Angeles because I have a niche in there. I think any other county going to be easier than the Los Angeles County, but we have a more, I will say, demand when you own anything in a Los Angeles County or operate in Los Angeles County versus when you go out. But even within the Los Angeles is a huge county. You say more than 10 million people lives in Los Angeles County and 4 million lives in the LA city. So you can imagine when you combine all the surrounding counties, it's almost anywhere from 18 to 20 million people lives.
'Cause that is a lot of opportunity.
Absolutely.
A lot of opportunity. All right. Let's so when you talk with property owners, okay, this beyond rent and occupancy, when you talk to property owners and investors today, what have you noticed has changed? What have you noticed that has changed? Is it still just rent and occupancy, or what are they really asking for now?
What are the owners are asking me?
Yeah, you the owner. Are you more just focused on rent and occupancy, or what are you focused on now?
At this point, it's a that's always been, I always say that real estate is not a quick, rich, overnight thing. As some gurus, like, kind of like send the message all the time from the stage. It is a long-term wealth creation tool. So if I still believe there is an opportunity in every single cycle, if you buy right, manage well, and hold for long run, you will be successful. In a real estate, you only time you lose money, especially in a apartments, if you're forced to sell. If you're forced to sell when the values are down. So I always like advise to other owners as well. Hold for long run. At least like a look for 7 to 10, 8 to 10 years minimum. Yeah, you can turn around the property quicker, but look for those ones. And also, especially when you are investing in a market like a California, Los Angeles, understand the rules. Because our state, it is a tenant-friendly state, and city or the state can change the rules overnight. And if they change the rules, and if you're not aware of those rules, or if you does not have a operational expertise, you can lose your investment very quick.
From your operations background, what are the top 2 or 3 metrics or processes you watch more closely that grow cash flow, and 2, cut admin headache? So as an owner, feel like that you got it under control.
Great question. I think going back to just like say you make money when you buy the property, and also after that to operate the property. Operational is the key to at this point is some expenses as a owner or a landlord, you have no control. You have no control over what the insurance is going to come and charge you. You have a little bit control to maintain the property in the best possible condition. But still, okay, you did everything in your end, still your premium got double. You have to live with that. Some regulations come, you have to live with those. But the fundamentals are still the same. Going back to run the ship tight, you understand where the market is going. And those are the things comes with the hands-on approach. Because even some of these big companies who sell data, and I find those data from my market is wrong. Or sometimes they are 6 months behind. When I say, let me take it back, it's not a wrong, they are 6 months behind. Where they get the data? They get the data from a guy like me. And by the time we put the data out, we're already 6 months, okay, this is what the rents we are collecting. This is what is happening, or this is what the properties are trading. By the time the data goes into their system, and by the time they just sell to the other owners or to the public, they are 6 or 8 months behind. And by the time the market change. So going back to, is a operational knowledge is very critical, especially when the market is going down. When the market is up, you can buy any kind of property. Your properties appreciate. You're going to look genius. But when the things comes down, that's why there is a stress test. There is an underwriting. There are certain things you have to be disciplined, for that. Actually, I was talking to some of those operators or the owners who are in the real estate much longer than even some are even longer than my age. And when I'm talking to them, if you get one thing out of them is a disciplined underwriting. Discipline, discipline, discipline. They don't get excited when the market is up, and they don't just kind of a panic when the market is down, because they've been disciplined when the market was going crazy. So they didn't pay overprice, and they didn't sell when the market was going down. So they didn't panic. I think I say the same thing. It is like any other business. You have to be disciplined.
That's some great advice. Actually, don't panic, because the real estate goes up and down.
Oh no, it will come back. It will come
Yeah,
back. Look, as I said that unless people start living in the sky, for that time we are good.
yeah, it's true. Let's transition a little bit to the technical. Now, a lot of people are excited about tech, AI for tenant messaging, tools for maintenance. all of that. Now, how do you balance new technology with real human oversight and relationships, especially with high value assets?
I think technology is helping big time. I've been doing this for long enough. I remember, like, for little inspections or other stuff, like, how to communicate with the tenants. Like, you have to go post the notices. We still have to post the notice on certain, like, if we need access. But even for something is going on the property, how you have to notify it. Simple is like, there is some plumbing work going on and you need to turn off the water is one example, right? You are calling each tenant, unless it's been scheduled. But if it's emergency, then you have to call everyone. Right now, one click of a button, you can send a text message to hundreds of whatever number of units in that building with one click of a button. Or the tenants, like, they can do everything online these days. They don't need to call all the, like, task. They can even talk to the AI. They can just report all the repairs. So technology is changing, making our life much easier. I can't imagine what we used to do right now, what we can do with um, less staff. Yeah, with the certain, like, old school tenants, you have to work with them. Um, they still want to do, because they've been doing that for the last 40, 50 years. It's hard to change. Uh, but technology is helping big time.
So, what have you guys incorporated within your company as far as the technology?
I think from our property management software side, like, I think they are adding all these features. Even I always, whenever I'm talking to my staff, I tell them, I think we only use 30 or 40% of all the features available to us. Doesn't matter, I say, when it comes to the investor relationship, or it comes to the property management, or communicating with the vendors, we are only using 30-40%. It's a work in progress. But I always encourage my staff to just, like, okay, we need to start using technology as much as possible. Less human involvement is better. And wherever we need to have a human touch, then we need to give a human touch. Otherwise, let the technology do most of the work.
Okay, all right. So you embrace technology, which is good. So you're not old school pen and paper technology.
No, technology is the
All right.
way to go. Otherwise,
Yeah.
one person, we're going to be way behind.
Yes. Yes. I definitely agree. So, in simple terms, like Sanjeev, for our audience, what does value add multifamily deals look like in today's LA market?
So value add is where the property has a deferred maintenance, mismanaged, tired landlord is retiring, not taking care of the property, kids inherit the property, they don't want to deal with that property. So we look for those kind of opportunities, and then we go and renovate those units and give a better living conditions for the tenants, and is a win-win for tenants and us. And this is how we
Hmm.
increase our property appearance, property value, and well-maintained property, managed property always get the higher value.
Okay. And then from day one, when you buy the property, right? How long, does it take for it to, you to feel like it's stable?
It depends on property to property, location, rules, regulations. A lot of things are we have a control. Certain things we do not have a control. I will say like a 3 to 5 years.
3 to 5 years. Okay. Do you have an example of one, a story that property you bought, stabilizing it and everything? You have an example?
Yeah, some are can be get stabilized as maybe under 2 years. Some can take up to 5 years for that. There's a multiple. That's why the time range um, from where the property is and depends on and for the tenants and the rules, what we can do with that property. But some properties can be 100% stabilized in 5-6 years. Sometimes you can only bring the value up maybe 50, 60, 70% in the 4 or 5 years. So this is not a one set formula when you are in a market like a Los Angeles, where sometimes the residents, they're happy where they at. They do not want even to upgrade their own unit for whatever the reason.
Yeah, that is true. They don't want to move. They want to stay how it is.
Yeah.
Yeah, because they're used to and comfortable there. They're like, I don't see what's wrong.
Yes. Yeah.
Now, Sanjeev, you built a strong network of realtors, contractors, and lenders. Can you walk us through how that network has helped you buy, renovate, and refinance in a way that keeps deal profitable and moving fast?
Yeah. I think it's a number of years in the market in a short answer, because the vendor you use over and over, the lenders you use over and over, the broker you use over the years, that's where okay, this person can deliver this. And sometime with your own experience as well. Sometimes I'm the one who goes and kind of coach and teach the vendor, okay, this is what it's going to take for you to do this job with all those years. And then I think, okay, this person did deliver. I can, with my closed eyes, I can give this project to this vendor, and I know I can leave him or her for this job, and I know I'm going to get the result, and they're going to deliver what they are saying, or they're going to deliver to my expectation. And that comes with the years of experience, years of dealing with the same. And then also it is from the other landlords or the other operator, it's sometimes their online, their presence or other things doesn't convince me versus getting a reference from my peers, from my colleagues, okay, Sanjeev, I've been, this vendor did deliver, or this lender did deliver, or this broker, or you can see okay, what these, who they are using. And that's where it comes with experience and comes with the years in the market.
Okay, good deal. So let me ask you a question. As far as your goals, I know we're coming up on 2026. What is LME's goals for the coming up year? Is it to grow your company, to get more doors, or is it to help with the operational side? What is your outlook for 2026?
Our goal is to grow by more value add properties. And this is I think, a short window of time where the properties are at discount because of the high interest rate. Insurance premiums are double, triple. Operational cost is high. Construction cost is high. There is a tariff. There is a uncertainty in the economy. There's so many things are happening where institutional investors are backing out of these big metro cities. And this is a time where somebody buy the property right at the right price, going to do really good and have a long-term approach. I'm not even saying that to wait for the interest rate to come down, because we do not know when the interest rate is going to come down. Nobody has a crystal ball. But if you buy at a great discount, manage well, and then hold for long run, I think anybody who will follow this will do good. And this is the short period of window we have right now. And we have a fund going on. It's called LAVD Fund, Los Angeles Value Add Multifamily Fund, where we bring the passive investor. And our approach is a long term. We are not a short term. We are not a flipper. We don't believe in those crazy IRR people who, we are a risk adjusted return. That's what we believe in. And we believe in buying a good asset, manage well, and build the wealth over time. And if somebody is interested, just check it out. Reach out to me.
So, Sanjeev, I always like to do a fun 6-question fire round. Short answers, first things come to your mind.
Oh,
All right, you ready?
let's go.
Number one, what was the first property you ever bought? And what was one lesson from that deal you still use today?
I bought the development land and I sold too quick.
Okay. All right. Number two, you're in LA. What's your favorite local spot to grab food after walking a property?
In and out.
In and out. Okay. All right. What's one app or tool on your phone you use every day to run your business?
You know, I use Trello for my with my staff, and the property management. The second that's for the work to just see that where all the operation, how's the operation we are doing.
All right. And then what's one book, podcast, or resource you'll hand to a new investor who wants to get into value add multifamily?
One book for to get into the multifamily. I think
Could
it's.
be a podcast or resource.
I think there are multiple podcasts out there. There's some like they can start with the Bigger Pockets podcast. And regarding the books, there are so many books out there. I think I learned from all those books 1 or 2 points, like in when I was starting. But I think is a one should read and attend those events and read all the books and podcast. But the real result will come after they're going to take action from that knowledge. So advice is that read, but take some action. Don't go crazy, but start small.
Yeah, one step at a time. Inaction is bad.
Yeah.
So when a deal gets stressful, what do you do to reset? Reset. Gym, walk, music, or something else?
I go for a walk.
So what's a one sentence piece of advice to a small landlord who wants to level up and think like an operator?
I think buy right, hold for long run. Do not and this is not overnight. This is not 3 years, 5 years. Look that okay, you're going to hold this for 10 plus years. If you are thinking to just flip under 5 years, do not buy it.
Okay. All right, Sanjeev. Now, where can people find you? To
They can.
do.
My website is a lmeinvestments.com. L as a Larry, M as a Mary, E as a Edward, investments, plural, S at the end.com. They can find me on a LinkedIn or Instagram is a Sanjeev, SAN, J as a John, double E, V as a Victor, B as a brother, LA, or I think Facebook, Instagram, or X is a Sanjeev Bhatia, LA. My first name, last name, LA. I'm easy to find on social
Okay.
media.
Easy to find. All right, and I'll definitely add those to the notes how to find you. Sanjeev, that was a powerful, and I appreciate how clearly you broke down the value add blueprint from corporate operations to boots on the ground investing in one of the hardest markets in the country. Now you showed how systems, people, and smart deals all work together, and I know our listeners got a ton from it. Thank you again for sharing your story and your playbook. And for those listening to the Truvish podcast, go ahead and subscribe. I appreciate you, Sanjeev.
Thanks, Marcus. My pleasure.